Hi everybody, this is Dan French with Priority Financial Network. This is your week-ending rate trend for mortgage rates October 12th, 2018. Tuesday was really the start of the week. Monday they were closed in the markets. Tuesday started off and you've seen some smart money getting out of the stock market due to fears of rising yields. And so you look at that, you look at rates right now, we're at 7-year highs still. Even though we've had a little bit of better pricing this week, we probably gained about 1/8 of a point or close to it this week. A lot of money coming out of the stock market and putting it into more safe haven instruments. Obviously the bond market is one of them. And so when you look at what rates we're doing, we started out 4.90%. We're hovering right around 5% right now, even though we did gain some pricing back. And so you look at that, you look at some of the things. One of the things that came out on Thursday was the consumer price index, which is a real key indicator for inflation, and inflation was pretty tame. And we all know that inflation is really something that does have a negative impact on rates is if it goes higher. Obviously, if inflation goes higher, consumer, goods and services go higher, cost of goods and services go higher. So when you look at that, and then you look at what happened today, where there was a lot of people still pulling their money out of the stock market. Stock market didn't do too well this week, which usually has a good impact on rates, which it did. We gained almost 1/8 of a point back, I would say, this week in pricing. And you're looking into next week, one of the things to look at is that you look at the overall health of the economy. One of the reports that came out was foreclosures is down, really it's pretty low level. I mean, we're really seeing the benefits right now of a healthy market, the economy doing well. Rates, even though they're temporarily good, like I said, we're going to have these nice patches here where you're going to be able to lock in a rate because we gained maybe 1/8 of a point for that specific week. But overall, we're going to continue to see the trend go higher. And so looking at what I'm advising clients to do, it's obviously locked sooner than later. There is no real indication that rates are going to go back the other direction. And so we all know that the Fed's no longer purchasing these bonds. They're not putting in, buying them at a rapid rate like they did in 7 and 8. So they're not manipulating the market, if you want to call it. So we're in a true market right now. Some of the things to look at next week, we have housing data coming out next week. We have retail sales, which does have a big impact on rates for next week. And right now it's a good thing. I mean, we did get some pricing back this week, so I've locked in some refinances that I was on hold just until we've seen what was going to happen. And if you're looking to refinance, obviously you want to do that sooner than later. A lot of them are doing cash out refinances, so still rates do have an impact on that. If you have any questions, you can give me a contact back, 702-332-3532, or email me a question, dan.french@priorityfinancialnetworkteam.com. Have a great rest of your weekend.